Welcome back, everyone, to today's Explainer. Today, we're diving straight into a massive challenge that literally every finance team faces, turning that giant, dense mountain of financial data into total, crystal-clear cash flow visibility. We're talking about SAP's cash and liquidity management tools, and how we can finally make that leap from manual, everyday chaos right into automated precision.
So here's our quick roadmap. We're covering 4 main areas: core cash operations, mastering cash pooling, liquidity and alerts, and finally the power of memo records, wrapping up with a look at the Memo Records 2.0 comparison. Let's get right into it.
Let me ask you something. Honestly, how clear is your company's short-term cash forecast right now? If you're still relying on manual forecasts, hunting down scattered bank accounts, or waiting on delayed reporting, you already know the struggle. It's so incredibly stressful trying to make those big strategic decisions when your view of today's cash is, well, blurry at best. Our goal today? We're going to clear that up completely.
Starting off with Section 1, Core Cash Operations. Look, generating a cash position isn't some kind of dark magic, right? It actually follows a super methodical 4-step daily workflow. It starts with preparation. Then you move directly into inputting those bank account balances, followed by monitoring the balances, and finally cash positioning. That's your end-to-end scenario based on imported bank statements. And when you lock into this flow, you get this immediate, reliable overview of your current financial situation across all your bank and clearing accounts. It's an absolute game changer. Now, to actually execute that workflow, the system leans on a few really key features. First up, cash position KPIs. These give you that crucial high-level overview. Then you have actual cash flow analysis, which is awesome because it lets you drill down across literally any time frame, days, weeks, months, you name it. And hey, if you spot something a bit odd, you can navigate straight to the original documents to check the line item details yourself. Plus, it handles bank-to-bank transfers with a fully traceable approval process. The big takeaway here is that you're getting the bird's eye view and the microscopic detail all in one place. Makes mitigating those financial risks so much easier.
Moving on to Section 2, Mastering Cash Pooling.
Okay, so once you can actually see your cash, the next step is optimizing it. At its core, a cash pool is basically a hub-and-spoke financial structure. Think of a bicycle wheel. You have one header account, which is the hub, and one or more sub-accounts acting as the spokes, all assigned for a specific validity period. This centralized setup is exactly what lets companies concentrate their cash balances and honestly just drastically improve the efficiency of their everyday cash management.
Let's think about a specific hierarchy. Imagine a bank account, let's call it account B, is a sub-account in one cash pool, but then acts as a header account in a second cash pool. That works perfectly fine, no issues there. But if you try to take account A, which is already the header for that first pool, and make it the header for a third pool, the system steps in and restricts it. Why? Because a bank account can only be assigned as a header to one cash pool at a time. It strictly cannot be the header for 2 different pools. The system actually enforces these logical rules to prevent you from creating these massive, catastrophic accounting loops.
So once your hierarchy is all set up, you've got to control the actual flow of the money. And the system gives you 3 really specific transfer directions to do this. First, you can choose from sub-account to header account. This essentially just sweeps all your credit balances up into that main hub. Second, you have from header account to sub-account, which lets you push money down to cover any debit balances sitting on those sub-accounts. Or lastly, you can just choose both directions. That gives you maximum flexibility, letting you cover deficits and concentrate surpluses at the exact same time.
All right, Section 3, Liquidity and Alerts. Having great visibility is wonderful, but a system that proactively protects it, that's even better. SAP has this built-in situation template, and it is called FINCLM-BACCTTBALDX exceeded. Yeah, I know, it totally sounds like someone just dropped a keyboard, but behind that massive bowl of alphabet soup is immense business value. Instead of your supervisors sitting there constantly refreshing screens to check balances, this template actively monitors the data for them.
Here's exactly how it works. The template comes with these pre-configured conditions. For instance, if the closing balance of an account drops below 0, and the balance type happens to be either an available balance or a value date balance, boom! The system instantly creates an open situation and fires off a notification straight to the responsible supervisor. What you really need to take away from this is that your team will absolutely never miss a critical balance drop again. The system is doing all that heavy lifting, the manual monitoring, for you, which frees up your team to jump in and actually take action right away.
Which brings us to Section 4, the power of memo records.
Now, this is your ultimate tool for tracking money that hasn't officially moved yet.
But what exactly is a memo record? Well, they're manually or centrally created records for expected cash flows that just haven't been generated in the system yet. And they solve that awful universal pain point, the surprise deficit. You know the one, when a huge outgoing payment is planned but it hasn't officially posted, so your current cash balance is looking artificially high and giving you a false sense of security. Memo records fix this. They bring those future pending transactions right into today's cash flow analyzer, giving you a truly accurate, realistic picture of where you actually stand.
To keep all these pending flows perfectly organized, SAP gives us specific memo record categories. You've got residual forecast for your cash flow reconciliation, you have planned items for those more generic plans, and there's payment advice for when the bank info is totally locked in. It even handles intraday bank statements to automatically generate intraday memo records. Having this level of granularity means you're no longer just guessing at your future cash. You are categorizing it with exact, targeted certainty levels.
And finally, Section 5, Memo Records 2.0 Comparison.
SAP introduced a massive upgrade here that completely changes the efficiency game. When we compare the classic version to 2.0, some vital upgrades jump right out. First off, data storage. It's no longer just sitting in the one exposure hub. It now uses its very own database table. That means you can finally trace the source of every single record with total transparency. On top of that, version 2.0 fully supports mass imports. It also supports the creation of actual cash flows and introduces dynamic field status controls. Honestly, it's a fundamental shift in how flexible your cash management can really be.
Let's talk about those mass imports for a second. Version 2.0 uses a super generic, simple Excel template for this. So instead of your team sitting there painstakingly entering hundreds of expected flows one by one, you just use the spreadsheet. You can list out multiple different memo record types, literally just separated by commas in a single cell, and upload the whole shebang in one go. And if something goes wrong, the error log shows you exactly where the problem is. This drastically cuts down your manual data entry time and basically eliminates human error from your daily forecast updates.
So, the big question, are you ready to transform your cash forecasts from manual guesswork into automated precision? We've just seen exactly how these tools can standardize, optimize, and protect your cash. And the craziest part? The functionality is probably sitting right there in your SAP system right now. So the real question isn't whether you can afford to implement it, it's what is it costing your organization every single day that you aren't using it? Something to think about. Thanks so much for joining me for this explainer, and we'll see you next time.